Welcome to the Riskwiser Zone. I'm your host, Lewis. Today we're diving into the rapidly evolving world of cryptocurrency and the escalating competition in the Asia-Pacific region. The APAC market has emerged as a battleground for global exchanges, with players like Robinhood and Binance making significant moves to capture market share. Recently, Robinhood announced its plans to acquire two regulated Indonesian financial companies, marking its first major push into Southeast Asia. This strategic move gives Robinhood immediate access to one of the region's most dynamic retail trading markets and provides a regulatory foothold in a country where crypto adoption is outpacing traditional equities. On the other hand, Binance has achieved a regulatory breakthrough in the Middle East by securing a full suite of licenses from Abu Dhabi's Financial Services Regulatory Authority. This makes Binance the first global exchange to receive end-to-end operational authorization from the FSRA, potentially positioning Abu Dhabi as a new hub for tightly supervised crypto activity. The APAC region has become a critical market for global crypto exchanges, with on-chain activity exploding from $81 billion in mid-2022 to $244 billion by late 2024. Other major players like Coinbase, OKX, Bybit, and Kraken are also ramping up their presence in the region through new regulatory licenses, region-tailored trading products, and strategic hiring. As the competition in APAC continues to heat up, it's essential to consider the implications of these developments on the global crypto landscape. Will Robinhood's entry into Indonesia and Binance's full licensing in Abu Dhabi disrupt the status quo, or will other players adapt and evolve to maintain their market share? We'll be exploring these questions and more in our upcoming segments, but for now, let's take a break. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're exploring the world of personal finance and risk management today. Our middle segment takes a closer look at two fascinating stories that can help you make informed decisions about your financial future. First, let's talk about the importance of understanding cash flow. A recent article highlighted the significance of managing your income, expenses, and debt to achieve financial stability. The cash flow formula, which is income minus expenses and debt equals cash flow, can be a powerful tool in helping you prioritize your spending and make smart financial decisions. On the other hand, we also came across an interesting piece about savings rates and investment strategies. It seems that many people are looking for ways to grow their wealth, but may not be aware of the risks involved. From high-interest credit card debt to investing in stocks and bonds, it's essential to have a clear understanding of your financial options and the potential consequences of each choice. To achieve financial success, it's crucial to strike a balance between saving, investing, and managing debt. By prioritizing your financial goals and making informed decisions, you can reduce your risk exposure and increase your chances of achieving long-term financial stability. As we navigate the complex world of personal finance, it's also important to consider the role of good debt versus bad debt. While taking on debt can be a risky move, it can also be a strategic one if done correctly. For example, investing in real estate or pursuing higher education can lead to long-term financial gains, but it's essential to approach these decisions with caution and careful planning. Ultimately, managing your finances effectively requires a combination of knowledge, discipline, and patience. By staying informed, setting clear goals, and avoiding common pitfalls, you can take control of your financial future and achieve greater stability and security. Welcome back to the Riskwiser Zone. As we wrap up today's episode, let's take a closer look at the latest developments in the artificial intelligence sector. L&G Asset Management, a British institutional investor, has shared its insights on the AI industry, and it's worth noting that they're not too concerned about the rising debt issuance in this space. According to Ben Bennett, head of investment strategy in Asia, credit related to the AI sector could grow between $500 billion and $800 billion a year, reaching nearly $3 trillion by 2030. Now, some investors might be worried about an AI bubble, but LNG Asset Management doesn't seem to share that concern. They believe that the earnings of the big tech giants are very impressive and that there's still room for growth. However, Bennett does note that the supply of AI debt is a bit concerning, and they're taking a defensive approach when it comes to allocating to this sector. On the other hand, LNG Asset Management sees opportunities in the equities of AI firms, citing better upside potential compared to bonds. They're waiting for the right timing to invest in AI debt, but for now, they prefer US stocks over Chinese stocks due to their ability to translate revenue and profitability into share price appreciation. As we look ahead to next year, LNG Asset Management forecasts that the tech theme will dominate Asian equity markets, with moderate growth expected in countries like South Korea and Taiwan. They also note that the de-dollarization trend is expected to continue, with investors diversifying away from US dollar assets. It's worth considering these insights as you navigate your own investment portfolio. Remember to always do your research, stay informed, and be cautious when it comes to emerging trends like AI. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.